So I've been asked this question about my view on the Reserve Bank meeting later this month, the 17th of February to be precise. And this is a meeting that potentially will impact millions of homeowners across Australia. Inflation is slowing, but financial pressure is mounting. Many are hopeful that a relief is coming through rate cuts. I'm going to break it down for you and give you the bank's strategist consensus view on where we're heading later this month. So hi, I'm Mark Kevin, Director and Principal at Mortgage Advice Bureau, Sydney, and I work with people every day who are trying to make sense of this interest rate environment that we're in. So whether you're a homeowner, a seasoned investor, or you're looking to buy soon, understanding what's happening with the rate cycle can make a really big difference in your financial planning. So why does this matter to you? Even a small 0.25%, 25 basis point rate cut can lower your monthly repayments on a standard $600,000 mortgage by around $100 a month or $1,200 a year. And if more rate cuts to follow, which is predicted, that relief will grow over time. But it's not just about repayments. Lower interest rates can also make it easier to access lending, as the banks will adjust their serviceability assessments down, allowing borrowers to qualify for higher loan amounts or better refinancing deals. If you want to take advantage of a rate cut, whether it's refinancing to a better deal or securing finance for that new purchase, it is important to start preparing now. And we call that being credit ready. So what do you need to do to be credit ready? Well, it starts with reviewing that credit position, looking at your assets, your liabilities and your income, ensuring all of your documents are in order and having a solid borrowing strategy in place. And this will put you in the best position to act when the opportunity comes. So where are we with rates right now? Over the last couple of years, we've seen quite an interesting cycle. We've seen some of the fastest interest rate increases in Australian history. But back in 2020 during COVID, the Reserve Bank set the cash rate at a record low of 0.1%. Fast forward to today, and after a series of rapid hikes, we're sitting at 4.35%, the highest level in over a decade. What a swing. The big question is now, are we finally at that turning point? And according to Australia's big four banks, ANZ, CommBank, NAB and Westpac, the answer is absolutely yes, which is great. They all predict that we've reached the peak of the rate cycle and that first rate cuts are actually going to start this month. But why? Well, of course, one of the biggest factors driving this is inflation. The latest data shows that it's cooling faster than expected, and that's a positive sign. It means the RBA have enough confidence to start easing rates, giving homeowners and businesses some breathing room. However, just because the banks are predicting a rate cut doesn't mean it's guaranteed. The RBA has a really tough job of balancing inflation, economic stability, employment, and whilst inflation looks great, employment is remaining strong, and this might encourage the RBA to hold rates steady for just a little bit longer. So while it is possible in February, they may wait just a month or two to be sure. So what does this mean for you? Well, if you have a mortgage or you're looking to refinance or you're thinking about buying, this month is a great time to get in touch with your broker, review your options. Even a small rate cut could make a big difference in your repayments, and being prepared now so you don't miss out when that market shifts later is well worth looking into. And don't worry, when the RBA meets later this month, we're going to send another update on exactly what's happened and what they've decided and what it means for you. So stay tuned and I'll see you soon. Thank you.